So Nick, we were just talking a little bit about whether to pay off your student loans during this moratorium or whether to invest. We saw a little bit of your answer in that clip, but expand on that a little bit more. What are some of the calculuses that people need to be going through to think about where to put their money right now?
Yeah, so the video says it all. No, but it's important to differentiate between federal and private student loans when determining your payoff strategy. Federal student loans, they have lower interest rates, around like 3.5%, 4%. And as you mentioned, they're currently in a payment moratorium because of the CARES Act enacted back in 2020. But private student loans, they have interest rates that can go up to 13%, and they are not currently deferred. So my philosophy, as you saw in that video, is to hold your low interest federal student loans for absolutely as long as possible, making minimum payments across the entire length of the loan. And during the CARES Act, just not making payments on them at all. And then pay off your high interest student loans as fast as possible. And like I said in the video, this is because of something called opportunity cost. Since 1957, the average return of the S&P 500, which is basically a stock index of 500 of the largest companies in the United States, it's returned about 10.5% per year. So the question becomes whether you'd rather get a guaranteed savings of like 3.5% to 4% by paying off your federal student loans early, or whether you'd otherwise like to take the chance of investing in the stock market and just assuming or taking the chance that you get that 10.5% return by investing in something like an S&P 500 index. Now, I graduated in the fall of 2017 with about $25K in federal student loan debt. And instead of paying off my federal student loans early, I made minimum payments on them up until the CARES payment moratorium, which I stopped making payments at all, and invested all of the money I otherwise would have been using to pay off my student loans. And this isn't going to be the case for everybody. I definitely had good market timing here, but since I've graduated in the fall of 2017, even with the stock market not performing super well this year, it's still up 75% since I've graduated. So instead of paying off my loans early, which had about a 4.5% interest rate, and saving that amount of money, I instead have made an average of about 15% per year. So again, these are not typical returns, but this just shows what opportunity cost trade-offs you have to weigh when deciding how to pay off your student loans.
You know, Nick, it's so funny because I went to school and now I went to grad school and my boyfriend says I'm a bad investment because I'm so highly levered.
What?
So, it's a joke. He loves me, but I get the point here. And I'm wondering here if you're also choosing between investing in the stock market where you get a return, to pay down your student debt between 4% and 13%, as you're saying. And then there's credit card debt. For a lot of people, I know that also gets very high very quickly, 20% or higher. So if you have that choice, then isn't it a better choice to pay down credit card debt?
Oh, 100%. Yeah, again, you can look at it through the lens of opportunity cost. Would you rather invest in the stock market and during the average year, you get like a 10% return, or pay off your credit card early, which is paying you like 20 to 25% in interest? I would much rather save 20 to 25% by paying off my credit card early than investing. So if you do have high interest, what I call bad debt, like consumer debt, like credit card debt, then definitely pay it off as soon as possible. It's a completely different world than student debt is.
Nick, talk to us about maybe some of the biggest questions that you're getting from your audience, because I know you talk about student loans, but you talk about a number of things. What is it that people are asking you about these days?
Yeah, I mean, just in general, it's like, hey, how do I open an investing account? How do I start investing? How do I use a credit card responsibly? Because this kind of stuff, I mean, it's much better now school-wise. And in high schools, at least when I graduated back in 2014, there really wasn't any personal finance classes or anything available to the students to really teach them the basics about money. And I think now roughly 50% of high schools across the United States require some sort of personal finance class. But even then, like, they're teaching you how to write checks, they're teaching you what a bank account is, they're not teaching you these kind of like next level financial concepts that you need to truly thrive financially. And hey, I mean, I guess that's a good thing for me because I get to go on TikTok and teach the world about that along with all my other influencer peers.
You know, I'm really wondering here, the investing in the stock market last year is very different than investing in it this year. You can look at, okay, well, it's fallen a bunch, maybe it's good to buy. Or, hey, wait, we have tough times ahead, things could get worse here. So when you talk to folks, I mean, how are they thinking about that opportunity cost now? Is it a good time to buy, or is there just too much to risk?
Yeah, well, my philosophy on investing, and I tell this to all my followers, so they're kind of getting this ingrained in their minds too, is if you put money in the stock market, don't plan on touching that for at least 5 to 10 years, if not longer out. You're investing for the long term because you believe that either an individual stock that you're investing in or that the stock market as a whole is going to continue having that 10.5% annual return. And if the stock market's down right now, that just means everything's on sale. If it was Black Friday, you wouldn't like walk into a store and say, oh, this TV is 20% off. I'm not going to buy it. You would jump on that chance. You would buy that TV if you wanted that TV. So like an index fund or a stock that you want is on sale because the market's down. You want to buy it. If the real estate market goes down, you want to buy a house.
Nick, we need more time with you, Nick. But appreciate you joining us. Nick Meyer, certified financial planner and TikTok influencer.